Hello, everybody, and welcome to the latest edition of CNF Talks. It's my pleasure to have with me today John Patrick Mullin, who's the CEO and co-founder of Mantra. And John Patrick's going to be speaking at the Tokenisation Summit on the 21st of November in London. John, welcome.
Thank you so much. Really excited to be here and definitely looking forward to London. Maybe not so much the
Fantastic.
weather in November though. That's okay.
It's great to have you with us. Let's start with perhaps a bit of a background check on the potential for this market. I mean,
Mm.
there's a lot of discussion about tokenization generally, and tokenization of real world assets. What's the limit in this? What's the scope of real world assets that can be tokenized?
It's a great question. I mean, I think depending on your time frame, almost limitless. I mean, this is
Yeah,
really this is, multi-trillion dollar opportunity. I think major consulting firms, McKinsey, BCG, have put out reports projecting, upwards of $16 trillion of assets on chain by 2030,
wow.
as low as 2 trillion. I mean, these are big
Mm,
numbers, and if you think about all the assets in the world, whether that's real estate, debt, equity securities, or even things that we don't know that could be considered an asset class, whether that's wristwatches or whiskey or Pokemon cards, the options are almost limitless. And we do believe that anything can be tokenized. Doesn't mean that everything will be better in tokenized form, um,
yeah.
but uh, but we do want to be a part of that story and a part of that opportunity. And the sky really is the limit.
Yeah, fantastic. But what are the real advantages of tokenizing these assets, and why is it superior to how things are now?
Yeah, so there's a number of reasons, and it will depend a little bit on the asset class, but generally speaking, I think this idea of access is an important one. So I use the example of myself. I'm a middle class white American from the Midwest, and
Yeah,
I live in Hong Kong. I've been in crypto for a long time. A lot of my net worth is in digital assets. I live on chain, so to speak. For me to
mm,
be able to participate in the equity markets in the US, which obviously is like a given if you're an American, for
yeah,
most people at least, I would have to go from my crypto wallet to my exchange account to my bank account to a brokerage, which is
mm,
multiple steps, and that's a painful process. Fees, tax, time, and that's for me in my privileged position. But if you think about someone, in Southeast Asia or Latin America or Africa who has no access to these type of things, who has
mm,
maybe a currency that's devaluating every other day, they'd much rather hold a tokenized treasury or even just a tokenized US dollar than
yeah,
their local currency. So this idea of being able to use blockchain technology to give that trustable access to different types of products on chain is really important. Fractionalization, or just reducing the kind of the ownership stakes required to access these markets, is also very
yeah,
important. You might not be able to buy a tokenized money market, or sorry, a money market fund from BlackRock because the minimum ticket is 5 million. Even
yeah,
for wealthy individuals, that's a lot. But you could take
mm,
maybe 100K or 50K or 5K, which really does lower the barriers to entry for participants. And I think the third one
mm,
that a lot of people talk about is this idea of potential global liquidity. It's definitely not there
mm,
yet because this is still a nascent market. We're still bringing things on chain. We're still figuring out regulatory landscapes, regimes, et cetera, and
yeah,
creating secondary market venues for these things to trade. But imagine having an international global stock exchange. That's
yeah.
obviously a very promising idea.
Yeah, I mean, the potential sounds absolutely enormous for so many different types of assets. And I think the fractionalization point is key. You mentioned money market funds, private equity commitments, very much an area where retail investors can't get so much involved. But through
Absolutely.
tokenization, I guess they could. But whilst all of this sounds fantastic and it sounds like a brave new world, what are the main challenges to getting it going properly?
I mean, a number of them. I mean, I think there's still technical limitations, although that's improving day in, day out. There's regulatory challenges. I think that's probably one of the biggest. Um,
Yeah.
you know, every country has a little bit of a different spin on things. Every country has their own regulator. There doesn't seem to be really a global alignment on how these things should operate. One country might say this is a security, one country says this is a commodity, one country says this is
Yeah.
a token. So that's a very big challenge. And when you're talking about real world assets, you are thinking of these things, almost asset class by asset class, country by country, or jurisdiction by jurisdiction. So that's a global remit, and that makes it a unique regulatory challenge from that regard. And you also just have in certain places regulators who don't like anything tokenized or anything crypto, and they just assume that token means crypto and not necessarily, maybe even just a tokenized security. So it could follow securities rules. So, there's that part. And I think third, another challenge is honestly education and, getting people to understand exactly what they're engaging with. And part of that is also improving the end user experience to be able to transact these things, because for many people, it's still very complex, and, dealing with things on chain or in tokenized form does require a little bit more of a lift than just going on your Robinhood account or Revolut and just clicking some buttons on your phone. So we're working towards that Web2 experience, but it's going to take some time.
Yeah, I think you're right. It's education and getting people to understand precisely what it is, and the fact that you're not talking about crypto, you're talking about the use of blockchain, and getting people to understand that there is a distinction to be made there. But turning to your own business, tell us a little bit about Mantra. How have you positioned Mantra within this emerging market straight technology?
Absolutely. So, Mantra is building both the protocol for asset tokenization as well as the secondary market, trading venue. But the protocol itself is a layer one blockchain solution. So it means we have a sovereign validator set that, transacts and validates blocks and transactions on its chain. We really want to be the, protocol or the layer for provenance of real world assets on chain. They can go, engage in other blockchains, other ecosystems, other applications, other places, but we want them to ideally, start and have provenance with us. So if we, become that kind of layer of settlement or layer of recognition of where these things come from, it becomes a really big opportunity for us. And then again, can be proliferated into other ecosystems, other venues, other places around the world. So that's really kind of our goal at the moment, to be that layer of recognition for all the settlement of these real world assets.
And so would you describe you're part of the infrastructure that will facilitate the tokenization, and I guess your customers are what, institutional investors, developers of apps.
We kind of have a B2B2C model, I would say, and it's a little bit all of the above, which makes it a little interesting. It's funny, some of my investors, say that like one of the reasons that, I think I'm good at my job is because I can talk to the crypto degens, with the NFTs and the monkey faces and all this kind of stuff in one instance, and then I can go. I don't really wear a suit that often, but I can go and talk to the institutional investors of the world and be able to really communicate with both sides of this equation, which is honestly incredibly important, because in today's market of these things from a permissionless blockchain perspective are crypto native users, and they're not really like wanting to know too much about the suits and wanting to know too much about TradFi, as we call it. But at the same time, where the capital is, where the money is, where the regulators are, it's a very different paradigm. So you need to be able to speak their language too.
Yeah. I guess it's a matter of uniting those two different cultures, isn't it? In order 100%. To make it all work really well. But look, we've run out of time, which is a pity, because this is a really interesting subject. So, but for our viewers, very much hope you'll be able to join us in person at the Tokenisation Summit in London on the 21st of November. If you can't join us in person, you can watch it virtually. More information at the City and Financial Global website. John Patrick, thank you so much for sharing those views with us today.
Thank you. I appreciate it.